Welcome back, everyone, for another deep dive. This time, we're taking a look at the pharmaceutical industry.
Yeah, exciting stuff.
Today, we're looking at Akums Drugs and Pharmaceuticals Ltd.
Oh, cool.
You might not have heard of them,
I haven't.
but they're actually India's largest contract development and manufacturing organization.
How?
They're focused specifically on the Indian market.
Okay.
So they're kind of like a behind-the-scenes force behind a lot of the medications that you see every day.
Oh, interesting.
Yeah, even if their name isn't on the bottle.
So they're like the manufacturer for a lot of
Exactly.
different brands.
They manufacture for other companies.
Okay, got it.
So to figure out what's going on with this pharmaceutical powerhouse, we're digging into their Q2 FY25 financial results.
Okay.
They were just released.
Very recent.
And we also have a recent investor presentation that we're going to be looking at.
Sounds good.
So
They even just went public too.
they did.
Through an IPO.
Yeah, in August 2024.
Fascinating.
Yeah. And that IPO raised a substantial 6,373.70 million rupees.
Yeah.
But before we get into how they plan to use those funds, I'm really curious about this recent quarter.
Yeah.
They were dealing with a sluggish demand environment, and yet their performance was really impressive.
It was.
They actually saw increases in their revenue,
Yeah.
EBITDA and PAT, compared to the previous quarter.
Which is interesting.
Yeah.
It is interesting. You can appreciate their success even more when you look at what Akums refers to as adjusted EBITDA and PAT.
Okay.
Essentially, it's like looking at the report card, but removing the extra credit assignments.
Okay.
It gives a clearer picture of how the core business is performing,
Okay.
which is really important for understanding their long-term profitability.
So even without the bells and whistles, they're still crushing it.
Exactly. Now, when we compare this quarter's performance to the same period last year, so Q2 FY24,
Yeah.
the picture changes a bit.
Okay.
Their adjusted EBITDA is down, but that's largely because of a one-time boost they got last year from a big R&D project.
Yeah.
This year, they've actually improved their gross margins, which means they're becoming more efficient.
Oh, yeah.
Even more importantly, their adjusted PAT actually increased.
So despite the challenges, they're finding ways to be more profitable.
Yeah.
It makes you wonder how they pull that off.
Well, one key factor is their incredible resilience,
Okay.
which is perfectly illustrated by their recent achievement of becoming cash surplus.
Wow.
As of September 30, 2024,
Okay.
they had a surplus of 3,406 million rupees.
Wow.
This kind of financial stability speaks volumes, especially in a market as unpredictable as pharmaceuticals.
Okay, let's unpack the different parts of their business.
Sure.
We've got CDMO,
Right.
branded and generic formulations, and API, which stands for active pharmaceutical ingredients.
Exactly.
So basically the full spectrum, right?
Yes.
Yeah.
And their CDMO segment, which handles the development and manufacturing for other companies, is their bread and butter.
Yeah.
It accounts for a whopping 77% of their total revenue.
Wow. But didn't you mention they saw a decline in this segment?
Yeah, about 15% year over year.
Okay.
However, this wasn't because they lost clients.
Oh.
It's actually a reflection of reduced volume sales, likely due to that overall economic slowdown we discussed earlier. Interestingly, despite this dip in volume, their EBITDA margins in CDMO remain stable compared to the last quarter.
Okay.
This tells me they're managing their costs well, even in a fluctuating market.
So smart cost management is helping them weather the storm.
Right.
What about the branded and generic formulation segment?
That's where we see a real success story.
Okay.
Their margins in this segment jumped from 4.5% to an impressive 10.3%.
Wow.
This is thanks to their strategic decision to consolidate their trade generics business and the continued strong performance of their branded and export segments.
But the revenue in this segment declined as well, right?
This was intentional. They made the calculated decision to reduce their focus on trade generics to concentrate on areas with higher profit potential.
That's some seriously smart maneuvering.
Yeah.
It's like they're playing chess while everyone else is playing checkers.
Yeah.
What's happening with their API segment?
API has been a consistent performer for Akums,
Okay.
demonstrating continued revenue growth driven by increased volume sales.
Okay.
However, like many others in the industry, they're facing pricing pressure, which has impacted their EBITDA margins in this segment.
So even though they're selling more, they're making slightly less profit on each unit.
Right.
Is that something to be concerned about?
It's definitely something to keep an eye on, but Akums has a history of adaptability and resilience. They've proven they can navigate challenges and come out on top.
Okay.
Speaking of challenges, let's talk about what happened in Q2 FY23. You might find the story pretty compelling.
I love a good story. Tell me more.
Well, during that quarter, one of Akums Group companies had a major setback. Their facilities in Chandigarh were hit by severe floods,
Oh, wow.
damaging inventory and equipment and leading to significant losses.
Wow. I can't imagine having to deal with a natural disaster on top of everything else.
It's definitely a testament to their strength that they not only recovered from this disaster,
Yeah.
but also just this quarter, they managed to restore one of the damaged machines.
Wow.
This actually allowed them to reverse some of the losses they had previously recorded.
That's incredible. They literally turned a flooded facility into an opportunity to bounce back.
Yeah,
It really shows their operational strength and adaptability.
it really does.
Now, circling back to that IPO we touched on earlier,
Right.
let's dive into how Akums plans to use those 6,373.70 million rupees they raised
Okay.
to fuel their future growth.
Sounds good.
Let's hear it. Where are they focusing their efforts?
So first and foremost, they're tackling their debt.
Okay.
They're going to use a chunk of that money
Okay.
to pay down borrowings, both for Akums itself and for their subsidiaries. This move strengthens their balance sheet and gives them more flexibility to make strategic decisions going forward.
It's like clearing out the clutter so they can build something amazing.
Right.
Right. So what's next on their agenda?
Next up is boosting their working capital.
Yeah.
Think of this as giving their business engine more fuel.
Okay.
Having more cash on hand allows them to manage day-to-day operations smoothly and pounce on new opportunities as they arise.
I love that analogy.
Yeah.
So they're clearing out debt, fueling up their engine. What else are they planning with all that IPO money?
Now for the really exciting part,
Okay.
they're setting aside a portion of those funds for inorganic growth, which means acquisitions.
Oh, what's this?
They're clearly looking to expand their reach and capabilities by strategically bringing other companies under the Akums umbrella.
Ooh, that's a power move. Strategic acquisitions can really shake things up in an industry.
They can.
Any hints about what kind of companies they might be targeting?
That's the million-dollar question. It'll be fascinating to see what sectors or technologies they're eyeing.
Yeah, for sure.
And finally, they've also allocated some funds for general corporate purposes.
Okay.
This is like having a financial cushion,
Yeah.
allowing them to adapt to unexpected situations or seize unforeseen opportunities.
Makes sense. It's like having a rainy day fund, but for a pharmaceutical giant.
Exactly.
So they're paying down debt,
Uh,
boosting working capital, preparing for acquisitions, and keeping some cash on hand for strategic flexibility.
Exactly.
That sounds like a solid, well-rounded plan.
It absolutely is. And all of this aligns perfectly with their ambitious vision for the future,
Okay.
which they laid out in their investor presentation.
Okay, let's dive into that presentation.
Sure.
What stood out to you? What are the key takeaways?
First of all, their scale is just mind-blowing.
Okay.
They have a massive manufacturing capacity of 4,959 crore units.
Wow.
To put that in perspective, that's enough to produce medication for nearly 5 billion people. This gives them an incredible advantage as they look to expand into new markets.
Wow, that's like having the ability to supply medication to more than half the world's population.
Yeah.
That's huge. What else caught your eye?
Their product portfolio is incredibly diverse.
Okay.
We're talking 4,146 commercialized formulations across 60 different dosage forms.
Wow.
They're not just making pills.
Yeah.
They're producing a whole range of medications to address a wide array of health needs.
Okay.
It's like a one-stop shop for pharmaceutical manufacturing.
So they're not putting all their eggs in one basket. That's a smart strategy for any business,
Right.
but especially in a complex field like pharmaceuticals.
Exactly.
They must have a pretty impressive client list, right?
Absolutely. They serve a whopping 1,524 customers,
Wow.
including 26 out of the top 30 players in the Indian pharmaceutical market.
Wow.
Think about that. The biggest names in the industry rely on Akums.
That speaks volumes about their reputation and the trust they've built.
Yeah.
They're clearly doing something right. But it's not just about maintaining the status quo, is it? They've got to innovate to stay ahead.
You hit the nail on the head. Akums is definitely not resting on their laurels.
Yeah.
They have over 220 innovative formulations in their pipeline.
Wow.
This tells me they're committed to developing new and better solutions to meet the evolving needs of the market.
So they're not just filling prescriptions, they're pushing the boundaries of what's possible in pharmaceutical development. That's exciting.
It is.
How do they fuel that kind of innovation?
Well, they've invested heavily in a robust R&D team.
Okay.
comprising 406 scientists,
Wow.
with over 300 of them holding doctorates or postgraduate degrees.
Wow, that's some serious brain power.
It
They're
is.
clearly committed to staying at the forefront of the industry. And is that investment paying off?
Absolutely. They've already secured 5 granted patents and have numerous other patent applications pending.
Oh, wow.
This intellectual property portfolio is a valuable asset that will drive their future growth and competitiveness.
So they're not just producing medications. They're developing cutting-edge technologies and protecting their innovations.
Right.
What about their global reach? They're not just focused on India, are they?
Not at all. Their operations are remarkably diverse and have a global footprint.
Okay.
They have a presence in 65 countries,
Wow.
with manufacturing facilities strategically located across India,
Okay.
each specializing in specific areas,
Okay.
whether it's oral solids, sterile preparations, hormones, or other specialized dosage forms.
It's like they've created a network of specialized pharmaceutical hubs.
Yeah.
They're not just a company. They're an ecosystem.
That's a great way to put it.
And their API segment is also worth highlighting.
Yeah, it is.
They have a strong portfolio of APIs catering to over 200 customers.
They do.
So they're not just a CDMO.
Right.
They're a vital supplier of raw materials for other pharmaceutical companies. They're playing a critical role in the entire pharmaceutical supply chain.
Exactly. They're a true force to be reckoned with, and their ability to adapt, innovate, and maintain financial stability amidst various challenges is truly remarkable.
They've faced economic headwinds,
Yeah.
natural disasters, and the complexities of going public,
Yeah.
and they've emerged from each challenge stronger and more focused.
Absolutely.
It's a testament to their leadership, their team, and their unwavering commitment to excellence. Akums is a company to watch closely.
Yeah.
They're not just riding the wave.
Yeah,
They're shaping the future of the pharmaceutical industry.
I agree.
So what does this all mean for you, our listener? What can we learn from Akums' story?
Akums is a prime example of a company not just surviving, but thriving
Yeah.
in a complex and volatile market.
Yeah, they're doing really well.
Their ability to adapt, innovate, and maintain financial stability amidst various challenges is like a masterclass in navigating uncertainty.
Yeah, totally.
Yeah.
They're playing the long game, investing in R&D,
Mm.
expanding their global reach,
Yeah,
building a rock-solid financial foundation.
for sure.
Makes you wonder what their next move will be.
It really does. Will they double down on their CDMO business?
Right?
Go on an acquisition spree?
Yeah.
Or maybe venture into uncharted territory within the pharmaceutical landscape?
Yeah.
There's so many possibilities.
I'm putting my money on a bold move.
Yeah,
These guys aren't afraid to take risks and disrupt the
it's
industry.
true.
But no matter their next step, Akums is a company worth keeping an eye on.
Absolutely.
Their journey is far from over,
Yeah,
and I have a feeling the most exciting chapters are yet to be written.
I agree. Akums embodies the spirit of innovation, resilience, and strategic growth.
Yeah.
Their story reminds us that even in the face of uncertainty, opportunities abound for those willing to adapt, evolve, and embrace challenges head-on.
Well said. This deep dive into Akums Drugs and Pharmaceuticals Ltd. has been truly insightful. I hope you found it as fascinating as we did.
I think it's safe to say we both learned a lot today.
Definitely. And to our listeners, we encourage you to continue exploring Akums' journey. Check out their website, delve into their investor relations materials, and see what exciting developments unfold in the coming quarters. Until next time, keep exploring, keep learning, and keep diving deep into the world around you.